So very good afternoon to everyone, and it's a real honor to be here in Vienna and to be representing Southeast Asia, a region which all of us operate in and are very passionate about. And we're quite glad to be able to share that with you today. So before we go into the panel proper, let's just run through some interesting facts and details about Southeast Asia so we can get the setting right. So if you look at the entire region, right, Southeast Asia is a collection of many different countries, collectively about 650 million people in terms of size. It has a very large penetration of mobile subscribers, probably one of the largest in the region. As you can see here, 109% compared to the rest of the markets. And here's the thing, Southeast Asians love spending time online. The two sectors, or the two markets that are most active online would be Vietnam and Thailand. And as you would see in the next slide, it's partly because Vietnam and Thailand form the youngest markets in the entire region. Vietnam, Thailand, Philippines, and Indonesia, over 70% of the entire market is actually below the age of 34. And a lot of them are experiencing the internet or the entire mobile culture primarily through their phones first. So collectively, Southeast Asia is pretty interesting. 9% of the world's population, 9% of social media, and 11% of the entire world's mobile subscription. But we cannot look at Southeast Asia as one entire market. It's pretty much similar to like the Nordic region in Europe. So how do we break it up, right? The three sectors that we break it up that are most interesting would be Singapore, Thailand, and Indonesia. Now, if you look at Singapore, a very small market, 5.4 million people, but an extremely early adopter market. The mobile subscription penetration at 148%. Singapore is also very, very strong online, having been going through the internet wave through their desktops first. 70% penetration in terms of social media. So everyone's very, very active on all sorts of social channels, Facebook, Twitter, and very high smartphone penetration. So for European startups that are looking to penetrate Southeast Asia, if you have something that's a bit more advanced and you want to find a test market, Singapore would be the right place to start with, since everyone, or pretty much everyone, has either an iPhone or a Samsung Android phone. Now, if we look at Indonesia, one of the largest markets in the world, 250 million people. A large part of it is still very, very rural, but it also has a very high mobile subscription base at about 112%. Now, a lot of them also spend a lot of time online, and if you consider that most of that time spent online is via mobile, it's actually very high compared to the rest of the region. But social media penetration is still low, growing very, very rapidly, but still low. In fact, a large percentage of Twitter's actual traffic is partly driven by Indonesia. Now, the smartphone usage in Indonesia is still very low at 14% penetration, but in the next year or so, especially with the advent of phones like Xiaomi and the low-end Android phones, this number is going to be increasing very, very fast. Thailand, my personal favorite market, and the market that Paul is from, is somewhere in the middle, about 67 million in terms of population and about 125% mobile subscription penetration. Thailand is typically about 2 to 3 years ahead of Indonesia in terms of content consumption and adoption of technology. So they still spend a lot of time online, and the social media penetration there is much higher, with a lot of the users adopting social media much earlier. And Thailand also has a much better smartphone usage. So unlike Indonesia, there are more Android, more iPhone users in Thailand than in Indonesia. Now, if we look at the diversity and challenges in Southeast Asia, it's nice to see the numbers in terms of what they have, but more importantly, there has been pretty impressive traction so far. So if we look at the recent investments, IPOs, and acquisitions, I highlighted a few that are more popular. So Alibaba recently invested in logistics company SingPost with a $300 million investment. And one of the more famous acquisitions out of Southeast Asia was Viki, the $200 million acquisitions by the Japanese conglomerate Rakuten. And interestingly, in the last 3 months, there have been 2 IPOs, one by Malaysian company MOL and another one by Singapore company MIGME. MOL actually listed on the NASDAQ and MIGME listed on the Australian Stock Exchange. So we're starting to see a lot of traction in terms of exits and returns. And if we look at who are the acquirers in the region, In fact, the US actually dominates in terms of the acquirers that are acquiring companies in Southeast Asia. So since this data is from 2008 till now, 23 exits by US companies, 17 by Singapore-based companies. But something interesting to note about Philippines only acquires local companies. So in that sense, the US, Japan, and even Singapore is actually driving a lot of the acquisitions in the region. And here's the best part. If you want to be based in Southeast Asia, being based in Singapore will give you the highest chance of actually getting acquired. So as we have seen in data, 32 of the acquirees were out of Singapore alone. And this is just a history of the company, of the numbers of companies that have been getting acquired over the years. So this has been growing very rapidly. And up till now, there's been close to $1 billion worth of acquisitions so far alone. So Southeast Asia is exciting. That's exactly what we're here to discuss today. And we hope to see more European companies and European investors coming to Southeast Asia to look at the market more seriously. So let's jump into the panel. And before we start with questions, why don't each of you introduce yourselves and what is your interest in Southeast Asia?
Thanks, I learned a lot. Thanks, Mohan. My name is Stefan Glaenzer. I'm an early stage investor with Passion Capital in London. Used to be an internet entrepreneur, have been founded Ricardo, Last.fm, and Mendeley. Have been very involved in the Southeast Asian region over the last 3 years as an angel, but I'd probably label myself as in the learning curve.
Hi, my name is Srivorakul. I'm a serial entrepreneur. I've built and exited 3 companies in Southeast Asia. It's very exciting times. The market is just picking up now, and I think that the demand from investors to invest in Southeast Asia is much higher than, I would say, available startups that are there for companies to either invest or acquire. So it's a really great time to start a company there.
Hi, I'm Patrick Linden. I'm in Southeast Asia, Singapore-based now since about 8 years. I started a company called Deal Guru, which went on to become iBuy back in 2010. Then more recently IPO'd at the end of last year, being in 6 countries in Southeast Asia right now with over 800 employees. Apart from that, I also co-founded a company called Food Runner, which does online food delivery now also in 5 countries in Southeast Asia. Currently, I have an investment vehicle called RVP Ventures, which concentrates on early stage aspects in the mobile and internet space. And I'm also spending more time in Europe these days with building up the leading electronic cigarette brand in the German-speaking region of obviously Germany, Austria, and Switzerland.
So thanks, gentlemen. So before a European company were to really explore the Southeast Asian market, what would be 2 or 3 considerations that you would ask them to look at before they seriously look at going in?
Let me put it another way around. In Europe, or the digital scene, we haven't performed that well over the past 15 years because we looked a little bit towards West too much. And frankly, it's tough to compete with the Americans. Looking east brings us in a sort of a different situation because the entrepreneurial ecosystem is much more developed in Europe compared to Thailand, Malaysia, Indonesia. So there's actually a learning curve we could bring to these markets. Combine this with the impressive stats you just presented. I mean, we are talking 650 million population. The whole of EU is, I think, 380 million. So it's nearly double, or factor 1.7. It's a huge market, highly underdeveloped, total different competitive situation. I think this should be argument enough to really look towards East. And not understanding East necessarily as the big guys, because they mainly think when they talk East, they think about India or China, but really look into the other small markets like Indonesia with 250 million population.
From my perspective, when you look at the numbers, just mobile alone is really eye-opening. You're looking at even for e-commerce sites, 50% of the traffic is coming from mobile. 30% of the transactions on e-commerce are coming from mobile. So when you're looking at Southeast Asia, it's in some ways kind of leapfrogging, Web 1.0 and going straight into mobile. I mean, you have, mega platforms like Line, right? WeChat is now entering the market. So, I mean, if you're a startup that's really focusing on building mobile apps, I think that Southeast Asia is really an ideal market just because of the dynamics in the market, and you're looking at not only from the consumer side, but even also from an exit perspective. What's unique about Southeast Asia is that you have local, regional, and global companies, mega brands, that will actually go into a bidding war to acquire companies there because that's kind of the new hot market. And many companies have missed the China or the India investments. So they're now starting to look at Southeast Asia, as they don't want to be left behind. And you're talking about the mega funds now that are going into that market and really looking to put money to work. So again, the mobile, and I would just say, focusing on mobile there, and Singapore, Indonesia, and Thailand are really the kind of the three key markets. That's very lucrative.
Yeah, and to that I would also like to add the aspect of timing. Back then when we started in 2010, there was basically no e-commerce existing apart from online airline ticketing and hotel bookings. So what you saw evolving in 2010 with the flash sales models, basically created a nice general layer of e-commerce, and now in recent years you have more and more niches which previously were unsustainable, really becoming hundreds of millions of dollars potentials in themselves. So I think in terms of timing right now, looking at Southeast Asia is absolutely perfect.
So Stefan, you were probably one of the earlier investors that went in through rebate networks. So how did you guys value the market back then? What were some of the risks that you guys were looking at? And what were the opportunities that you all see that made you guys go in that early?
I wish I could give you a substantial answer. The reality is, we saw with Daily Deal the model, or with Groupon initially with Daily Deal, we saw this is a super fast growing market and model, and then we looked at the map of the world and saw that nothing is actually happening in this part of the world. So then we simply decided, yeah, let's have a look there. We met Patrick and Stefan, and they started with Deal Guru in Singapore. Then luckily, I think half a year later, we met in Thailand. And I mean, just to give you an idea, because for most of you guys, it's probably the first time that you think or hear about the Southeast Asian region. Paul is a super exception in this region. Most of these guys, I hope I'm not totally wrong, but Paul is an entrepreneur by heart. He started 3 companies. This doesn't come often there. It is actually super rare. I'll give you an example with what happened. So you have to understand some cultural differences. When we've been in Japan at our Japanese operation there has been roughly 80 or 100 headcount. And I flew in for 24 hours and gave a speech to the guys as investor from Europe and told, well, what I really realize is I hardly see any activity on Twitter, and I wonder why you're not more active on Twitter. A week later, back in Europe, I saw the Japanese numbers, and they were crap. I mean, they were a total disaster. And then we looked at it, what happened. Literally, the whole online marketing department, 25 people, have stopped buying keywords, have stopped doing anything, but we had unbelievable tweets. It is just different dealing with these markets.
So Paul and Patrick, you guys are very familiar with a lot of the startups there, right? What are some of the unique business models that have worked phenomenally well in Southeast Asia?
Well, I mean, now you're starting to see kind of a lot of the crowdsourcing models, right? I mean, obviously, Uber, Grab Taxi, but I think that's applied now to kind of, the delivery, right? So you have Easy Van, GoGo Van, basically the Uber, the Uber of X, right? And that's not only sweeping the world, but also sweeping, Southeast Asia. And it's because, it's naturally, very mobile-centric and mobile-focused. And when you look at, kind of the crowdsourcing model, it's going to start to replace a lot of what you used to do with outsourcing. And in Southeast Asia, there's a lot of outsourcing. So, I definitely see the crowdsourcing just, it's going to go into every vertical in that region. And obviously also, I would say e-commerce. So e-commerce currently is still below 1% of total retail market. Online advertising is only 3% of total advertising. So when you look at in the whole ecosystem, those are the two main monetization models, of which they are still very low. So the opportunity for any company to enter that market and actually win market share, for example, Rocket Internet, Lazada, and Zalora, or even iBuy Group, right? They were able to win a huge chunk of that market only within 2 years. So I think that there's a lot of still kind of Web 1.0 opportunities, obviously with a mobile component, to actually win a great market share if entering in the next 2 years.
Yeah, I think the combination of mobile and crowd is an absolute killer right now in Southeast Asia. Like Paul has mentioned, the taxi applications, the Ubers, the Grab taxis. The same thing is happening right now for, almost traditional, I can say, the online supermarkets, which might get disrupted to some extent as well with models like Instacart, crowdsourced delivery as well. So models based on the platform of the crowd on a mobile interface, I think, are an absolutely interesting aspect right now in Southeast Asia. Countries such as Singapore, you have one of the highest smartphone penetrations in the world, I think second only to South Korea. So this is a lot more even than in most countries in Europe.
So for you guys, right, a lot of your companies were pretty regional. So for Patrick, it was based in the Philippines, Singapore, and even Malaysia, right? And for Paul, yours was in Thailand and Indonesia. So what was unique to each market? Like, what is it that we can share with them on certain characteristics of each market, and what are they interesting and different?
It was actually really visible back then when we launched the daily deal model, where you had, for example, countries like Indonesia and Malaysia behaving completely different to Philippines, Singapore, and Thailand, where people, jumped on much faster, tried this new model of e-commerce out, had much more trust in it. And for Indonesia and Malaysia, it took a lot longer to finally catch on. So I think it's really important to be aware. As a European investor, we're not dealing with the US, where everything is more or less homogenic. But you have, at the end of the day, 7 or 8 countries where you need way different approaches, ranging from the work culture, how you approach the market, in which ways you do your marketing as well over the long or over the short term. So plus all the legal aspects, the infrastructural aspects. At the end of the day, if you really achieve, establishing a company over those 6 or 7 markets successfully, you have a tremendous competitive advantage, because it takes a lot of time to learn all those aspects, and it's really difficult for someone from the US or even from Japan, no matter how much money they have to enter that market quickly in that aspect.
Yeah, I would say Singapore, Malaysia, and the Philippines, it's English language. So when you launch a startup, rather than have to localize it in multiple different languages, for example, Thailand is very similar to Japan, where it's a close language market. And so you have to get much more local than the other markets, including similar with Indonesia and Vietnam. And these are really big markets, so you have to, kind of really localize, as in, as you build iOS to Android, different apps, it's kind of very similar in these markets. You have to build a business that's very unique to that local language. You have to find a local founder if you really want to be successful and go local. But if you want to go more scalable and go in quick, Singapore, Malaysia, and Philippines, because it's English language, allows you to scale much quicker. This is for global companies or for regional companies that want to enter the market and hit as many markets as they can without having to adapt or localize. So I would say that that's the difference. Also, when you look at the customer acquisition cost, the marketing to acquire the customers, in the local language, it's actually still cheap, right? Because you're not competing against global keywords and global advertising. And so that's also the difference between, yes, you have to localize in the local language, but the customer or the CAC, the customer acquisition cost, is actually still pretty low. And so this is what makes it a very interesting market, because that cost is low now, but the rocket internet guys that are coming in, they're driving that cost significantly, right? But it's still relatively cheap versus Europe, China, and the US markets.
So Stefan, you were mentioning earlier that some of your portfolio companies at Passion Capital have actually set up some Southeast Asia operations or even are looking at Southeast Asia as a market. Could you share a bit more about that?
Yeah, again, put your money where your mouth is. So I'm actually having the discussion with Passion. We are invested in 40 early stage startups, and I'm literally having the discussions with at least 50 or 60% of these guys, whether for the next expansion looking towards the US or going east. So one company who made a very successful transition towards east, both have actually chosen Singapore as headquarter for mostly the reason Paul has reflected on. They do mobile panels in emerging markets, so that's probably a pretty easy one to understand. But the other one is Digital Shadows, which does cybersecurity. They do data leakage and they do attack intelligence, which is already from London selling brilliantly into the US. So 5 out of the 10 global leading banks are customers of Digital Shadows. It has been significantly tougher to sell into the Asian market without being present, hence we opened up an office there. We are talking with guys like OpenSignal who do crowdsourced signal strength in the mobile carrier sector and others. And the beauty is you see it's actually really, it's not only big numbers, but it's picking up. It's at a later stage or an earlier stage of the growth phase. So you can't compare, you shouldn't think 650 million are anywhere producing the same numbers in activities like the 280 million US guys, but think ahead 3 to 5 years, and I think these guys will outpace the US.
So the Japanese have been playing a significant role in Southeast Asia, and I shared earlier that the Japanese are some of the largest acquirers and investors in the region. How do you guys think the Japanese have helped shape the region, and why is their involvement in Southeast Asia a good testament to the region?
Well, I think the Japanese have been in Southeast Asia for many years. Really, the trading companies, they have mega investments in retail and just kind of the commodities, any of the natural resources. They're already been investing. But what makes it interesting in the technology space or in startups is that a lot of these guys, they know how difficult it is, from their past experience in the trading of how to really get local themselves and build. These guys are really looking at a lot of they're the ones that are looking at a lot of the M&As, right? So because they know that to build it locally, they actually would prefer to actually just acquire and then bring in the Japanese technology and then the Japanese know-how with local integrations. So, for example, in our company, we raised money from NTT Docomo, Recruit, which is a big GMO payments as well, and Sumitomo, a big trading house. And a lot of these guys are coming into our company because they actually want to look at potential deal flow, and look at as a stepping stone to be able to look at potentially acquiring other companies in the market. So they're definitely very active. Not only from, let's just say, from an investor side, but also from the M&A side.
Yeah, I would also emphasize that I think in the last couple of years, a number of them, tried or did set up their own operations, but eventually saw, because of these completely different environments in the 7 or 8 different countries in the region, you do need a team which really knows how to execute there. This is why we already saw a certain number of M&A deals in the last few years, and I think we're going to see a lot more of this going forward.
So one aspect I'd love, looking at the time, it is not one-dimensional. So far, we most of the time spoke of how big opportunities, but there's another aspect. Go to South Korea, go to Seoul, and trust me, guys, you're going to see the future. These guys, they are miles ahead from everything we see in Europe and everything I've seen in the Valley. When it comes to mobile, they have upload, download speed like I think it's 50 and 100 million, 100 MB. It is unbelievable. So going there for a learning experience and get inspired for your business in Europe or wherever your markets are is another way of looking at this area.
So we'll go into Q&A really soon, but I think we've painted a generally interesting and positive perspective of the region. But what are some like major misconceptions or blind spots that you think European startups should seriously take note of before they even consider going in?
I mean, the valuations for startups now are getting really ridiculous, right? Because there's so much money coming into the market. I mean, I think it's typical maybe around the world, but you know, you're having guys with like PowerPoints asking for, you know, $4 to $5 million valuations. And so, you know, you can kind of anticipate a potential, I would say a potential bubble. Also the talent, right? To actually recruit, you know, decent developers. I'm talking grade A developers or grade B. I mean, you know, these guys' salaries have quadrupled in the last 2 years alone. And so there's a real war for talent in Southeast Asia, to even a point where, you know, like Rocket Internet is bringing in guys in from Europe, right? And so, and in fact, it's actually even, you know, cheaper than trying to find somebody even local at times. So I think that those are some of the challenges in terms of, you know, really building the recruitment. I think is definitely key for any startup. But I mean, at the same time, you know, there's a lot of problems to be fixed and to be solved. And I don't think you have to be a local company. And I think that, you know, Rocket has kind of shown that you can come in, start a company in 2012 and be worth over $1 billion plus in 2 years, in less than 2 years alone, with a very kind of, you know, with tenacity and a vision. So